Welcome to Markets Now. I'm Michelle Rook along with Randy Martinson, Martinson Ag, and we're seeing a lot of red on the board this morning with the exception of old crop corn. And Randy, really, we're still embroiled in concerns and the risk off here with the banking crisis, aren't we?
We are. I mean, we continue to hear more news about this banking and the issues that is facing the banking industry. And right now, with Moody's coming in and downgrading the U.S. banking system from being stable to being negative, I think the market is still chewing into that. And there's starting to hear some rumors of some other banks that are seeing some issues too. So this is going to be an interesting of interest for a little while. And then it's going to be interesting to see what happens next week with the Fed. Are they going to increase interest rates, or will they take a break in this meeting because of the trouble that we're seeing?
Yeah, certainly a lot of speculation. They may back off to what, 0.25% in terms of interest rate hikes, or maybe not do anything at all.
Well, right. I mean, everybody was expecting there was going to be a half a point increase because of how the inflation numbers have been coming in, the unemployment numbers. So we needed to do something more. Well, now with this, it might now only be a quarter point, and some are thinking they might pass and not make any adjustments.
Well, it does actually impact money flow in the commodity sector, and we're still seeing that here today. Old crop corn, as I said, really the only place where we're seeing some higher price action. The bull spreads have been working the last few days. That's all due to this China business, more this morning, right?
Well, exactly. I think we're up to 75 million bushels here in 3 days that China's buying. We had anticipated, the rumor was that China was in buying. Now we're getting confirmation of that, and it's a little bit bigger than I anticipated. So, and it's likely not over yet. So we'll see if any more of these sales come into play, but it does really just solidify that the safrinha corn crop there's a little concern, and China's concerned they're not going to get their needs met from Brazil corn later in the year.
Obviously, that's a great indication of that. The weekly exports on corn, a little bit better, but we're still behind the pace when you look at totals compared to a year ago, aren't we? Like 40% again.
We still are lagging last year. There's no question about that. This is certainly going to help, to bring us back up and to be, more closer to last year. But it's, seasonal. We do see that, this is about the time China comes in, if they're going to, because of concerns about the south, because of Brazil's crop. We'll see how much more business comes in. It could bring us back up and at least get close to last year's pace. But we'll see here as we continue to go through the marketing year.
And we got weekly exports as well on soybeans. We're starting to lose pace here, which is expected now that we've got the world switching over to Brazil crop, right?
Oh, exactly. I mean, we knew that was coming. We saw that in our basis levels here up in the northern plains. Once the export market started to dry up, going to China, Brazil is seeing an open window for harvest, so they should be able to get moving a little bit better on their harvest side. But yeah, the exports will switch over to Brazil at this point. For China, I would expect we'll start to see some business come back in May, late April, early May. That'll help the soybeans, but for right now, it's a seasonal move, and we see that demand switch.
And the funds are liquidating in soybeans and meal. How much lower do you think they'll take this thing?
We got some room to move yet down. Down. Meal might not be as much because of the trouble we're continuing to see in Argentina. We continue to see, the production estimates decrease for that country, and that's just going to be a disaster. There's no other two ways about it. So that'll help stabilize the meal market a little bit, but I do expect that our soybean market could see a little bit more drifting, especially if we continue to see exports drift a little bit.
And speaking of exports, wheat exports were pretty horrible again this morning. And is that part of the reason that the wheat market's back lower again?
Yeah, I think so. I mean, wheat has been struggling in the export side. It's still surprising that USDA hasn't come in and made any adjustments, especially the last couple of months. We've been expecting that they would cut it. They're maybe thinking something's coming down the line, but I think the market is also watching close what's going on with the Black Sea Grain Initiative. Of course, Russia wanting to only extend it for 60 days, everybody else for 120 days. That expires on Saturday. We'll see who wins in this argument.
Yeah, we did get lower winter wheat crop ratings in a lot of the big major producing states again, and the market seems to be kind of almost ignoring that.
We seem to be ignoring weather altogether right now.
Right.
We've taken weather premium out, and up here in the northern plains, I mean, we're looking at northern South Dakota, North Dakota, Minnesota, looking at winter continuing to rage on. We're looking at another system coming through today. We're not looking at normal temps or above normal temps until we get into the first week of April. So we know things are going to be delayed up here. Market doesn't seem to care about that at this point. I think that will start to become a little bit more of an issue once we see the acres report at the end of March. And then once we get into April, then we'll start to see this market start to put in, I think, a weather premium.
Yeah, we have gotten Kansas City wheat at least back above the $8 mark. We got to get Chicago above these levels, though, too, don't we?
We do. I mean, Chicago is the kind of the collect-all or catch-all for the wheat market. So, and that's the one that's the mostly traded. So, yeah, we do need to see that get a little bit higher. We continue to see conditions decline in the winter wheat, so that should help.
Yeah, I said $8. I meant $7 for Chicago wheat. We've got to get above that benchmark here. We have gotten above $8 here on Kansas City wheat, at least. I want to ask you another thing in terms of the commitment of traders report and the fund positions. Of course, we got a big shock looking at corn. I think in 1 week, the funds had bailed out of like 147,000 contracts in the corn market of their long positions. And, what will that mean going forward? Will that give them maybe a little powder to push this market higher if we get some sort of a weather problem here at planting or not?
I think it will. I mean, and I think that was part of what, we saw that when we weren't seeing the report. And once we got a confirmation of seeing that acres or, the Ag Outlook form came with bigger acres and bigger stocks, the corn market kind of took a step back and said, okay, we can relax now. We've got acres. Corn has the acres to lose, and I think that created the funds to get out and start looking at going someplace else with their money. I do think that now with weather and concerns about where the acres will fall, we'll start to see them come back in and build a little bit longer long position.
Yeah, we're still flying a little blind there, though, in terms of that report. Cattle market, what do you think there? We've seen some pressure, I think, the last 5 or 6 days off of the contract highs from last week. And again, a lot of this is just jitters about what's going on with the macroeconomic climate, isn't it?
It is. I mean, that, cattle have been very responsive to the economic side of things, for quite a while. Prices are quite a bit higher. And if you start seeing a little bit concerns in the economy and little failing, that is going to tighten up this, we're not going to sell as much. We're not going to see the demand. So that is certainly something that is hitting the cattle market. We do have a cattle on feed report that's going to come out tomorrow afternoon. It looks like it should be friendly. Disappointing, I think, seeing that, they're expecting our marketings to be a little bit lower. That's mainly because of the storm slowing down cattle movement. And that, I think, will put a little pressure on the market. But I think we're seeing some technical selling. I do expect to see cattle come back up and trade higher because we are going to continue to see tight supplies. But we do need to see the economy improve. Hopefully the Fed doesn't make too big of a cut or increase in interest rates next Wednesday. I think that's going to be the big thing to watch forward.
Yeah, and we did have lower cash, and the boxes have been lower here this week. That hasn't helped. But how bullish does that cattle on feed report need to be maybe to stabilize this market here and confirm those tight numbers to get the market's focus or attention away from the banking crisis?
I think placements have to come in a couple points lower than where they're expected, and I would like to see marketings come in a couple points higher. I think that would bring some bullishness back into the market and kind of overshadowed some of this economic concerns.
And we're seeing that same risk aversion in the hogs continue too, aren't we?
We are, and we have, bigger problems with them. Like you said, cutouts are struggling, with the beef coming down, that's spilling over and causing a little bit of trouble. Yeah, disease issues. I mean, the hogs have just been really struggling really bad over the last 6 months.
Yeah, it just seems like we can't get the cash and cutouts really to advance more than just a little bit, and probably not enough here to really push the futures because we're still at a premium with those futures, right?
We are, yeah. And, hopefully we can continue to see some building, but we're going to need to see some increased demand. China importing a little bit more will all help. But right now, that's not on the horizon.
All right. Thanks so much for joining us, Randy Martinson, Martinson Ag, and that's Markets Now.